Hey traders, how's it going? This is Ruben with Financial United, and in this episode, we're going to be talking about the last topic. It's going to be psychology. Psychology is important because most educators agree that about 80% of trading in itself, it's all psychological. The other 20% is going to be the skill that you're going to develop. It's very taxing for us to see us losing money. From a very early age, you're actually conditioned to not lose money. They always tell you to be responsible with it, to safeguard it, and to never actually leave or part with it. And in trading, that's not going to always work. You're going to end up losing money at some point. So a few things that we can do to mitigate this process is to have a probabilistic mindset. So don't think in terms of black and white. Just think of the fact that some trades are going to work and others are not. And it has nothing to do with you because all you really have is just an edge. Without that edge, you can think of it as just flipping a coin. Either a price is going to go up or it's going to go down. It's really not going to do anything else other than that. Now you might be asking yourself, if it's just really a flippable coin, why can't I just pick one side or the other and let the odds play themselves out? Well, you absolutely could actually. And that would be no different than going to a casino. In a casino, you can play roulette. Now, you might think roulette's a 50-50, just bet on black or red. But the house knows that over a large sample size, it's not really a 50-50 of black or red. There's actually two extra squares in there that are going to be your greens. So your odds are actually a little bit less than 50-50 to win. But that's enough for the house. The house knows that just with that slight edge, they can actually make their money back. So why are we talking about this? Your edge or those two green dots? Now, it might not seem like much, but over a large sample size, they will shift those odds so you can be profitable. In that case, you turn from the customer into the house. So another important aspect of trading is going to be limiting beliefs. Now, limiting beliefs are those thoughts that you have that you might not be able to make it or that you're not cut out for it. And this usually happens during a losing streak or when something doesn't really go your way. Now, the key to this is that you need to believe in whatever you're doing. This goes along the concept of manifesting it to yourself or calling it to you. It is simply just the thought that no matter what happens, you will persevere. And that in itself will manifest into your actions and will bleed over into your trading, which is what you need to execute without any hesitation. So another thing that's going to aid your psychology is thinking in percentages, because it is a lot easier to digest losing 0.5% than it is to lose, say, $5,000. So it's really important to make the switch from a mindset that thinks in dollar amounts to one that thinks in percentages. The next concept is going to be something that I picked up in a book called Thinking in Bets by Annie Duke. And it's called resulting, which is taking something out of context in order to fit our narrative and shift the blame from us into an external factor. Say you're going to blame the dog, or you're going to say that the Forex market is conspiring against you. When what we really need to do is simply take accountability and own these mistakes so in the future we can learn to recognize these patterns and avoid them. And a perfect way of doing this is having an ASR. Now, an ASR stands for Advanced Self-Review. And this is going to be at the end of your week or even at the end of your trade. You're going to go back and you're going to log that trade and you're going to write the thoughts that you had on it. And you're going to write why you took it at the time and how you felt about it. Now, this is going to help you out when you're having a bad day or when you FOMO. It's simply going to let you look back at the trade and see what kind of mindset you were in. And recognizing those patterns is going to help you out in the future so you can mitigate any kind of FOMOing or any kind of strain from your plan. Because at the end of the day, this game is about consistency. And consistency will yield you the results, or it will show you the weak areas that need to tighten up. Now, all these concepts are great, but at the end of the day, we're just really scratching the surface on what psychology is. So pick up a book and start working on yourselves, because trading is as much a self-discovery journey as it is a skill set that you're going to build. All right, traders, I hope you enjoyed this episode. If you did, give it a like, subscribe, and hit the notification bell so you can see when the next video drops. Trade safe, and I'll see you guys next week.